All right. Good morning, good evening, good night. Buenos dias. What's going on, guys? It's a great Monday. Dimitri is first in the chat. We are having ourselves a hell of a Monday. Gonna be a great week. Everyone's grinding. What's going on, fellas? What's new?
We're both getting our haircut this week.
Oh,
Very exciting.
yes.
Huge, momentous occasion at Reds. Although we won't be able to go at the same time, of course. It's like one at a time.
Yeah, we can't hold hands like we usually do.
Yeah. So if we don't show back up on Monday, Red kidnapped us in exchange for all the crypto he thinks we have.
Man, I missed Red.
Yeah. So
luck.
that'll be nice.
Yeah. Should be going good. Anything going on with you guys in the crypto landscape? What's happening this week that you guys have anything to talk about?
Well, I mean, volatility is picking up. I couldn't wait for that. So we've been moving sideways for so long. Finally, some action. So I'm happy about that.
Yeah, it looked like we were gonna dump under 9K, and then all of a sudden it pumped back up. It's it's like its own little S&P 500 right now, just
Bullish.
tracking stocks. So other than that, man, what else? Just kind of same old.
Yeah.
Living the old digital nomad life, as some of our friends like to say, right?
Gotta love it.
As best as we can.
Yep, gotta love it. Yeah, hey, for those of you that are coming in the chat right now, for the regulars, you know what the deal is. We've got the column over here. I think it's breaking discussion, Bitcoin, Ethereum, EOS, and DeFi today. If you guys can leave a like, and if it's your first time here, go ahead and leave a subscribe. This is what we do every Monday. We're talking Layer1Live. We're talking news. We got Dimitri's Desk Tuesday, Fridays, and we've got the interviews mixed in between. So this is pretty much the start of Layer1Live. So I'm going to hit the stats really quick as we do. Top 5 countries this week were US, UK, Canada, Germany, Australia. We've got the top 3 episodes from this past week, Roll and Sid Kala. We've got the NFTs alert episode with Rob Finch, and we got the BlockFi episode with Zach Prince. The upcoming guests this week, we've got a late edition here for 6/17 for you guys. It's going to be Axie Infinity, and then we've got the 6/19 with Animoca Brands. So those are 2 big-time NFT players in the space. Hopefully we can have good interviews with them. TBD for 6/23, but stick with us. Renee's in the chat. What's going on, Renee? Good to have you here. Good to have everybody that's dropping in. Other than that, I think we did have one thing to get to with the community news. We are going to attempt, I know we've been talking about it for months and months and months, we're going to name the Layer 1 community by the end of the week. That's it. Like, we're going to run one poll. We're going to see what people put out there. Anybody that's interested, we're even going to throw it out to the public, but I think we're going to, lean towards what our community thinks it should be called. But we're going to throw it out there. We're going to name it by the end of the week. So next week, Monday, we'll be talking to the community with a brand new name. I don't know. You guys got anything to throw in the hat?
No, I don't want to reveal it yet.
Ooh.
Should be a surprise.
He's gonna anon it in the Telegram group and try to get the votes up.
Amazing. All right. Well, we've got breaking, we've got quick news, ton of good stuff to get to today, fellas. We got some discussion pieces. ETH is doing pretty well, at least in the community sentiment department this week. Kava is going to be a discussion piece, so I can't wait to hit that. But without further ado, let's hit the breaking news for the week.
Yeah, for sure. Speaking of ETH, kind of some strange happenings going on with fees on Ethereum, if you might have seen there. So it started with just one Ethereum transaction where there was a few $1 million worth of fees that were associated with a very, very small transaction, something like $130. When you're sending ETH, you can basically set the amount of fees you want to send. So I think the thought originally as this first transaction came through was that, maybe somebody fat fingered this. And I think the miner went ahead and froze the transaction so that whoever did this could get all of this, money back in fees that they supposedly accidentally sent. But thereafter, there was much more. There was about 3 total transactions, maybe 2 total transactions, but they totaled $5.2 million in fees. So this is obviously, pretty wild amount. And now the thought is that, believe it or not, an exchange is being blackmailed. So some exchange wallet or smart contract somewhere has, kind of unfortunately been given access, or hackers have gotten in and accessed this wallet supposedly, But because of the whitelist criteria that's associated with the wallet, where the wallet can only send funds to other certain approved wallets, the hackers are not able to send themselves the money. However, the thought is behind this blackmail strategy that because the hackers can send transactions to these whitelist addresses, they can basically burn through all of the funds in that wallet via, spiking these fees, as we'll talk about later in the episode. Some miners are kind of cool with it. They're saying, hey, $2 million in fees, I'll take that, unless we can officially prove that this is what's going on. So they are supposedly going to just drain this wallet unless they get sent what, they feel is due from the exchange. So kind of crazy strategy there. Haven't heard anything as of late. This came from Decrypt, and the theory came from PeckShield, which is a Chinese-based kind of coin metrics type company that evaluates these a lot of these on-chain statistics and whatnot. So pretty crazy. There might be some blackmail going on behind the scenes.
You got any thoughts on that?
Yeah, I don't know if who's actually winning in this situation. Like, if they're burning through all that stuff, right? They're not actually keeping the funds, right? There's the story that I think we might talk about it later on, where basically the mining pools were like, okay, we're just gonna split this up. Thanks for the
chop.
Thanks for the fee.
Yeah, it's interesting that this has become such a big story, and that ETH mining pool is still going to distribute those funds, as opposed to maybe working with the potential exchange. We don't even know the name of the exchange, and some people apparently do, and this is kind of like a story shrouded in mystery right now. But I'm surprised the ETH mining pool that we'll get to later is distributing those funds, even though they know.
Yeah, I wonder if there's a little bit of competition going on where the pool is wondering, hey, if we don't distribute these funds, will we lose equivalent hash power? So maybe there's a little bit of that. They've got some of their big folks in the pool saying, send me those fees kind of deal. But at the end of the day, this is all still very kind of in a quote unquote allegedly happening status. So obviously as more info comes through on that, we'll keep you guys posted. But pretty wild to see. Hackers are forever kind of coming up with new ways to get at all of the crypto sitting out there in these honeypots.
Yeah, when this story first broke and the first 2.3 million got sent to this mine, the pool, what did you guys think was the actual? Did you think it was a fat finger, or did you kind of have your theories?
Yeah, I figured it was a fat finger. Somebody screwed up in some way, especially because the miner at that time was supposedly going to freeze it in order to get funds back. But now that doesn't happen 3 times. So there's clearly something going on that's not this fat finger setup.
What's interesting is actually, what you mentioned about miners kind of freezing, the funds or whatever, right? So it's like, I saw where, they were talking about specifically like, hey, if this was a mistake, contact us and we'll like try to fix it. And it's like, that's so weird because like that doesn't really happen in crypto, right? Like you just like, you did this and that's it, man. Like you're out. But it's like, it's like a moment when it's like CC says, hey, let's roll it back. And everybody's like, wait, what? Yeah,
a little bit. Yeah.
There was a story that we're not going to get to, but a guy got hacked. Did you see that 12.5 BTC that some guy lost and like posted some like emotional video kind of pleading for the hackers to get it back? Man. Well, CZ actually like sent a response to this guy and was like, hey, we can work with you to kind of like freeze the addresses or kind of blacklist the addresses on these various exchanges. And the guy who lost the BTC was like, no, I don't believe in that. I don't really believe it was so funny. I was like, wow. Dude, you're such a I don't know.
Maximalist.
Yeah. Be more pragmatic in this situation. But anyways, I think we're up to 12 people in the chat here, so we appreciate you guys stopping by. To everyone listening on audio, thanks for stopping in. I believe we'll have the episode launched on Tuesday. It takes forever for YouTube to actually process the live videos, so that's why it takes so long. Usually we want to get you guys these videos on Monday, but we're kind of at the whims of YouTube. So anyways, we'll get to the last piece of breaking news here. Right before the episode went live, Alex Masmej, we've had him on the Layer 1 interviews, and he's been talking about his personal token that that he minted through Tri-Roll or the Roll team. Basically, people can like buy in to Alex as a person almost. I know personal tokens are very like fringe at this moment. We've rolled into kind of DAOs and NFTs and all these different type of assets that have been kind of popping up on the Ethereum network. Personal tokens are definitely the fringiest of the assets, and people still kind of are a little bit hesitant to kind of buy in as they should be. But basically, Alex, through his Roll token, is allowing people now to quote unquote control his life. He came out with a post today, said introducing Control My Life, and he basically is allowing people to vote on actions that he's taken in his life. And that actually came out this today and was basically saying that the vote number 1 is going to be a choice between, I guess, his choices in the month of July, basically being jog 5 miles, survive only on Bitcoin, stop eating red meat, or wake up at 6 a.m. So token holders of Alex can actually, get into some of Alex's life choices. This all kind of has to do with kind of the situation the episode that we had with Sid Kala, where he was talking about communities and being able to kind of interact. Well, these personal tokens are allowing essentially Alex's community that he's growing to interact directly with Alex. So I know that's kind of fringe. It's tough for me to have the personal token talk on this podcast, this show, because the guys I'm talking to don't really believe in it. I think I see kind of like skeptical talks, but we'll see, man. Like, there's definitely a lot of different things that are rolling out on the Ethereum network that are quote unquote kind of fringy. So that's basically where I'll leave it.
I think it's more like experimental and trying new things and doing all that stuff. If I did something like this, probably like my mom and my parents would buy up all the tokens to control my life. So but it's interesting to see something like this kind of happening. I was doing some interesting. I was watching Enron documentary actually this weekend, and it was interesting to see certain things, how in Enron they can be translated into the stuff that's happening like in crypto. And one of the things that Enron was doing is basically being able to cash in on profits right away before the idea actually materializes. So they were able to just push an idea out and collect profits right away off that idea before it actually materializes, before they start even working on it. And I was like, wow, that's ICOs basically. You're just basically collecting all the money at first, and because you have an idea and you instantly get paid. And this is kind of the similar way.
Yeah, this is like a bad Black Mirror episode to me, to be honest.
Yeah.
It's just like, I mean, I get it. I think it's good press, for the for the human token concept, and it's definitely different. It's definitely innovative. But I just wonder how much demand there is, and whether or not people actually care as to whether or not this guy's eating red meat versus jogging.
How is he going to prove it? Like, that's my
it's
like, blockchain or what?
He said there was going to be like some Telegram updates kind of thing to prove it. But it's kind of like, okay, well, I buy the token. This is the utility that I have. Like, why? I don't know. It's not really, I guess, a big enough kind of decision. I mean, it makes sense under a DAO structure where you're very clearly incentivized around a network and things like this. And I think that's what he's going for. You can make decisions that will help pump the Alex token.
Yeah.
But per Q's point earlier, we're not the ones to push this, I guess.
Yeah, definitely. I think its association with being a financial asset is where people get kind of like in muddy waters with the situation here, because he's like pushing people to buy his token on Uniswap. He's getting a majority of the minted tokens, obviously. So there's kind of like a loose affiliation there. But I do like the idea of allowing communities to take part, or community members to take more part in the communities that they're involved in. So like, let's say you're super interested in what Alex is doing, you can actually like get directly involved. Now, the fact that it's on Uniswap and there's this, financial, like gains and losses to be made. That's where I feel like this kind of gets muddy. But just from let's make the token like worthless, right? I like the idea of communities getting to vote on what their favorite streamer's doing, what their favorite gamer's doing, what their favorite, person is doing. It's just when you attach that financial asset or that price or that token or that exchange is when it starts getting muddy. It's like, okay, well, now is this guy, benefiting, and how it just gets a little bit more muddy in my thought process.
Yeah,
but,
for sure.
We'll move on here, but from like a specific processes standpoint, there's actually like they're using Ethereum wallets, but they're also not like having a transaction fee associated with each action, which is interesting. I think he's working with it's vote on alex.surge.sh. So I'm guessing Surge is the actual application that's being used to make these votes. So that is one. I've been talking with Cooper Turley from MetaClan, who's like involved in DAOs, and that's actually one friction point for DAOs. When people vote on DAOs at this point, at least on like using the processes now, you're going to have to pay an Ethereum gas fee, which people don't want to just like make all these voting processes. Like, I'm not going to spend $10 so I can tell Alex to fucking eat red meat. So that is one thing. It is cool to see that they're using transactions that aren't associated with maybe spending gas for the people that are actually taking part. But that was a long one for the breaking discussion, and in that story in particular, it is interesting, but we'll see where they go in the future. But we've got quick news. I think Renee's in the chat, but we appreciate everybody stopping by. I think we're up to 14 now, so we'll hit quick news and then we'll get directly into discussion.
Yeah, two pieces of quick news here from me, kind of more on the old institutionalization of crypto that we're always talking about. First one is more shilling from JPMorgan, if you will. So they kind of started out as the master fudder, and now they've quickly become the master shiller. They are saying that this Bitcoin crash and the survival thereafter with Bitcoin proves to them that Bitcoin has staying power. And I think really what they're getting at here is that the crash did not do anything super harmful to the community. Obviously, a lot of people lost a lot of money, but to the network itself, to the community behind it that owns some piece of the network, there was obviously quite a bit of survival, and we've pumped up towards somewhere between 9 and 10K at this point. I think we're about 93.50 right now. So, to do that, to see that sort of bounce back in only about 3 months here is pretty impressive. And JPMorgan says that it shows Bitcoin will be able to last, kind of the test of time. They talk about Bitcoin versus equities and commodities and some other things, and overall, it's definitely some good news from JPMorgan to see that, obviously on the back of the context of JPMorgan now offering their services to Coinbase and a handful of other larger crypto companies in the space. So
what a timing.
Yeah, what ideal timing there. The second piece of news I have is that among this kind of race for the top prime broker in the space, or the person that essentially controls all of the flow within crypto, especially the larger money coming in, say from your JPMorgan type clients, we've got another entrant into the ring. So Coinbase bought Tagomi, which was their own kind of entrant. Genesis Capital, who's another big player, bought Volt, which was a custody provider. There's a handful of other folks, trying to do the same thing. And now Galaxy Digital and Bakkt have joined forces to kind of launch a trading and custody service of sorts that will act in a lot of ways like that prime broker for what I would imagine to be pretty much strictly institutional investors. So, they're the pros here, kind of their differing factors that Bakkt has gone ahead and done all of the regulatory things it needs to do as that crypto custodian. They have giant backing from ICE, the Intercontinental Exchange, and all of the love that they've gotten on that front, and then combining that with Galaxy Digital, one of the larger institutional trading firms and players in the institutional space. You can start to see how the two of them together might be able to do some damage when it comes to siphoning flow from your more institutional clients into the crypto space. So definitely interesting news there.
Is that like kind of like a merger, I guess, or
Yeah, I don't know if it's a
partnership?
merger, right, from an entity standpoint, but it's some sort of joint venture.
Yeah, it's interesting to see Bakkt, kind of coming back in terms of volume trading. Coming back, get it? But yeah, anyway, yeah, they've been kind of struggling there. And I think this partnership should be a pretty cool thing for them, definitely. Anyway, so moving right along, I got two pieces of news. The first one, Celsius Network. So we know about these guys. We interviewed them. We interviewed Alex Mashinsky, and they did an ICO. We worked with them back in the day. I believe they raised 40 million, and they sold out pretty quickly there when they did their public offering back in the day. And now looks like they're opening up another raise that they're doing where the community can basically participate. And they do it through Bank to the Future. They're trying to raise their goal is like 10 million. They said actually 10.5 million. And they're doing this raise for the community, so people that want to get in on the success that Celsius had, they can essentially get some equity in the company. And looking at the requirements, basically you still have to be accredited investor to be able to participate. $1,000 is the minimum buy. 41 days left. Looks like they already raised 11.19 million. And the hard cap is at 15 million, so they're doing pretty good in terms of that raise, considering that just opened up recently. So it's interesting to see they're doing a raise, and the round is as far as the valuation goes, pre-money valuation is 120 million, which is I would say conservative. Quite conservative compared to other companies out there that did a raise and they were in the billions as far as the valuations go.
Yeah. Sorry, I think there's some lag going on, but I mean, it's interesting. One, that Bank to the Future is still a thing. I remember working with them at ICO Alert, thinking wow, this is gonna be one of the many ICOs that never amount to anything. So it's interesting to see them do work. It's also interesting, why is Celsius at this point doing a raise? That I think that was the first question we had when we inputted this into the dashboard. What's the need for a raise at this point? I mean, other than getting money.
Absolutely. That's something I was talking to Mike about before we started the episode, is that what's kind of the reason behind this raise, and kind of Mike mentioned hey, well, one way what you're doing is you engage in the community and you're giving them a chance to participate in what their goals are as a company to get more users into crypto, and a lot kind of give them the opportunity to take a piece of that history that they will make down the road and so on. But from the financial standpoint, we can speculate why they need more cash. It's always good to have more cash, especially if you have a competition that's heating up in the lending and borrowing sector right now as far as the interest rates go. It is possible that extra cash could be used to subsidize interest rates to attract more market share, in borrowing and lending space. We've seen BlockFi do a raise, too, so it's
cash is king.
Yep.
Yeah, for sure. Celsius at the same time just came out with new stablecoin rates. So I think BlockFi is sitting at 8.6%, and on Celsius you can get 8.69%. So very nice, very nice.
Very nice.
little troll there from him, and then supposedly behind the scenes, they were doing a race earlier this year. So something a bit more private. Obviously, I'm not sure where that ended or what that looked like, but one of the other things we mentioned was at the same time they can give the more of your kind of community based folks, at least those that are accredited, access to their equity, versus just reserving it all for your venture type funds or private equity or whatnot. This might be another interesting way for them to boost valuation, right? So maybe they do like $100 million round earlier in the year. Now they set this at 120, which then allows your VC folks to kind of pad their books, especially during a time when I'm sure it's hurting a bit.
Yeah.
So, Congrats to Celsius on that front.
Yeah, absolutely. All All right, moving along to the next piece of news. So there's a lot of stuff that's kind of coming out with this Grayscale stuff. Everybody's kind of speculating, trying to get to the bottom of like, okay, what is really going on here, man? Like, are these guys really purchasing this much BTC or ETH and so on, right? And everybody's trying to get to the bottom of it. And so there's one tweet that came out from Ryan Watkins that basically goes over and saying, hey, Grayscale, factor in in-kind purchases. Grayscale has only bought 31% of all new Bitcoins mined, since they're having far less than 150% many have reported, basically. And he goes into explaining in this thread basically how it has to do with the premiums that are on ETH and BTC in their trust, and how there is arbitrage that exists there, where essentially, since the premium is increasing and the ARB is increasing, then when people are actually buying, they're not actually creating new shares. Therefore, if new shares are not created, then no new tokens are not being bought in the spot market like ETH or BTC. So that's something that people might be overlooking, and everybody likes the narrative of kind of going jumping into the conclusion by just having, let's say, a theory of what's going on, and jump into a conclusion that's very bullish, right? Saying, hey, listen, Grayscale is just doing massive things for BTC, for ETH. You see the demand there and so on. But when you really start looking into it and digging deeper, when you understand the people that use Grayscale Trust, and what the reason they use it for, what the product is structured for, and kind of how that relates to the spot market, then you start finding out something different, in terms of how much is it really impacting the spot market, and then what will come if they start unloading some of those positions when they have redemptions and so on. So there's a lot of talk about Grayscale. A lot of theories about it. At the end of the day, those guys are making a tons of money. So, and they don't care if that thing is gonna go up, down, sideways, in circles. They're just providing you a tool that you can use to expose yourself to volatility of crypto.
Yeah, I saw something interesting as well. The folks from Wilshire Phoenix, which is a firm or a fund of some kind that was trying to launch a Bitcoin ETF, just announced that they're going to be launching something very similar to the Grayscale Bitcoin Trust. So some competition coming in, but yeah, I mean, if you can buy shares of Grayscale by selling Bitcoin or inputting your own Bitcoin into the system, then it's a lot harder to say, hey, look at all this volume. This volume all equates to Grayscale buying Bitcoin. So, your Three Arrows Capital of the world and a lot of these other larger crypto funds are just completely juicing these massive premiums over a year or so and making a ton of money all off the backs of this beautiful scheme that Barry Silbert has put together. So, if it works, it works, right? It's just a matter of educating yourself on what is actually going on behind the scenes.
Yeah, and it's kind of like normal for ETFs to have these premiums and have these type of setups, right? If you take a look at like gold ETFs, oil ETFs, and so on, right? They all have that premium and stuff there, right? Not to the extreme.
Not 860%.
Right? Yeah, I know. All right. But, eventually, I guess the idea is that eventually it'll...
I think we're good.
Oh, okay. Eventually, the premiums will, go down and start getting to normal. But anyway...
Yeah, we're getting a little bandwidth lag from maybe Zoom's side, but so I'm interested to hear your guys' thoughts here, because if it's only 31% since halving or what have you, and it's been reported as this like abnormally large number, why didn't the publications that reported 150% do enough research to understand that it really is only this 30%? Is it just them pushing a narrative? Is it lazy? Is it what is the reasoning behind that narrative kind of getting pushed up over the last like 2 weeks? Because we talked about it on the show like a couple times.
Yeah, I mean, I think people want to hear that their bags are getting pumped, and if you just kind of focus on that, then you're going to get more views versus somebody saying, hey, actually this is bullshit. If I hold a bunch of Bitcoin, I'm much more likely to go down the bias rabbit hole and read the things that tell me that my investment was a good investment versus read things that maybe question my underlying belief. So, one of those classic investment bias.
I feel like this should be in discussion because there's so many like headlines that come out from Cointelegraph, from, other media sources. And then when you read them, you just cringe because first of all, the headline is not even correct. And then sometimes even the headline doesn't relate to the article. I feel like these guys are pushing out articles as quickly as possible, not doing research, all that stuff, trying to capture the bulls to get clicks and views and all that stuff. It's all playing that narrative. Cointelegraph multiple times came out and said, this DeFi platform, Celsius, is like doing this and that. And like, when did Celsius get into DeFi?
Right.
It's like, come on, guys.
You didn't hear about Celsius DAO, man? Come on, they're moving away. Mashinsky's moving on out. But anyways, we're up to 18 people in the chat, in the channel. We appreciate you guys showing up. We got some quick comments to get to here. It looks like Renee has been chatting, so I'm going to hit some of his comments. FPW, he says, hi, guys. Greetings from Bavaria. We've got Hekadah saying, sup, Dimitri. Scott Harris Firestone, morning from Los Angeles. So we've got a couple comments there. Let me hit Renee really quick. He says, since fiat money is on its way out, what are your thoughts on the possibility of a major inflation crisis and its relation to stablecoins? Can they really be a safe haven? And then he also says, when you create fear like JPMorgan did, is that you want to create yourself time to be greedy? Warren Buffett once said, be greedy when others are fearful and fearful when others are greedy. What do you guys think about those two comments back to back?
Yeah, I mean, the second one first. So JPMorgan ended up getting fined by the SEC, I think it was, as they came out with those comments, because shortly before Jamie Dimon said that, they took down a massive Bitcoin short position. And then, of course, the market dumped on those comments from him. So I don't know if anything came about it. I'm sure they paid a fine, that was a fraction to what they made on that short. But, there was kind of some obvious, classic Wall Street scheming going on there behind the scenes. So, just another prime example of kind of looking past the headline or looking past the article there. And on the first one, right? Well, if fiat is on its way out and inflation is going to, be some massive consequence, and stablecoins are pegged to the dollar, then how would stablecoins ever be a safe haven, right? So like inflation itself is, a metric of the purchasing power of the dollar. So stablecoin is pegged to the dollar, and not really a scenario where the stablecoin all of a sudden has more value than its underlying peg.
Yeah, it's not clear here whether he's talking about USD when he's talking about fiat. So we've talked about this multiple times. If you want to go back and listen to those Layer1Lives, so we won't hit it too much today. But I think there might be a case here where he's talking about other currencies other than USD when he says since fiat is on its way out.
Yeah.
I mean, that definitely could be the case. Interesting. So let me start with the JP first. It's funny how we see that. Where, hey, something happens, a bank gets fined, but they made way more money, right? So it's like, Wall Street, they weigh it out. All right, how much we're going to pay, how much we're going to make, boom, it's a profitable trade, even if it breaks the laws or whatever, So, no, capitalism, bro. And then the comment about fiat and the stable coins. So, it's it's going to be stablecoins are getting into some interesting areas, specifically if we continue to talk about the dollar. If the stablecoins continue to rise in terms of market cap and we continue to have negative rates, $100 billion in a bank, and they have to pay, to store that money. So that's something that can occur down the road, which it'll be a test to stable coins, especially the dollar, with the interest rates projections and so on. And then, as far as the inflation goes, we obviously see unprecedented amount of money being printed. You see that dollar is being printed, but also at the same time, what happens is that the inflation gets extracted. We export our inflation In other countries that are maybe struggling financially, where inflation is going crazy, the government's trying to restrict them from converting that into dollar to slow down the devaluation of their local currency. So they're trying to slow down the demand, but with stable coins and other venues to get into the dollar that are available right now, that actually brings more, that kind of brings demand for the dollar. So meaning that if we have more people that are starting to get into dollars and we're printing more dollars, then the inflation will take some time to really start hitting the US dollar. Because it'll hit the other countries' local currencies first, and then the demand for people from those local countries will keep the inflation somewhat stable for the dollar. That's my theory there.
Yeah, for sure. I think we touched on that a bunch over the past couple weeks. So, those are our thoughts, Renee. If you have any comments specifically on what we said, go ahead and leave it in the chat there. So we appreciate you kind of following along. I've got a couple quick China news really quick. I'm going to hit the one about the exchange exploitation here, where they're getting kind of hacked essentially. There was a report out of China that this in fact was coming from a hacked exchange. I believe I'm going to look at the Peak Shield, which is it's either Peck Shield or Peak Shield. The local Chinese firm claimed hackers have indeed gained access to the funds of an unnamed exchange and are able to transfer to accounts marked reliable, not their own. So this is kind of just more information talking about what we're hitting on. So this was already kind of talked on, but it looks like there was just more information from Dovey and a couple others that report specifically out of China. And Vitalik also definitely hit on this as well, kind of jumping along the bandwagon there of, kind of confirming that this was all happening. So that's a little bit of news out of China. We also had Chinese authorities freezing bank accounts that had to deal with OTC deals for BTC. So this was just your standard run-of-the-mill kind of article coming from 8BTC, how the authorities, claiming that USDT was used. This was interesting because authorities claiming that USDT was frequently used in illicit activities. Could this be what we were talking about with the Chinese local governments or Chinese just government in general not wanting USDT specifically or some type of USD pegged stablecoin to be used in their country so that you have any type of outflow from the yuan or anything like that. So it's interesting that they bring up USDT, but it looks like 4,000, I believe, several thousand bank accounts belonging to cryptocurrency traders have been frozen by Chinese police. So I think there's going to be some people in the mix here who have their accounts frozen, who are no illicit activities going on, but essentially the police are essentially connecting bank accounts that are associated with any cryptocurrency exchanges and freezing their bank accounts so that they cannot trade these funds. So we'll be interesting to see. That's kind of, again, your standard Chinese story for the day. But
and if using Tether is illicit, then they've got quite a few more bank accounts to freeze, I think.
yeah, absolutely. I think China, we see these headlines time to time, right, where seizures and so on, right? At the end of the day, there's I think the government is trying to show aggressiveness to the market and show an example. Hey, listen, this is not the only place where it's going on. Kind of this is not the only bank accounts that are doing this. They're just showing it as a warning sign to the market. Hey, listen, if you guys going to be doing this, is the potential kind of repercussions that you can be facing and so on, right?
Yeah.
So. And kind of after maybe a week, this kind of just you see headlines where it's everything is fine, right? It's nobody really goes to jail or anything, right? It's it seems kind of blows over. Maybe people get paid off, the government, and all right, cool, we'll just let this one slide. But
yeah, we saw that in the ICO days, but now kind of getting a little bit more traction here is it's also happened in India, right? You see, I think there was a story from the block the other day that I think it was yesterday that said something about India looking to increase kind of their cryptocurrency regulation, or maybe looking to ban crypto, whatever the hell that means. But that's a lot of the stories that we saw back in 2017, 2018, and then literally a week or two later, the story would come out that, oh no, that's not the case. So I'm sure we'll see that happen with the stories that came out of India here. But I wonder, why specifically those two regions you see a lot of news surrounding cryptocurrency bans and all this kind of FUD around, the local police or local regional governments kind of shutting down cryptocurrency exchanges, miners, yada yada yada. So
yeah, for sure.
Yeah.
Well, we can move on to discussion here. Deem, I think you've got the first.
Yeah, I got the first piece of discussions here for us, gentlemen. The first one is BTC and ETH options are bullish. So, for those people that follow me on the desk, we've talked about this for quite some time, where you see the put to call ratios and the volume and options is overall picking up. Put to call ratio is becoming very bullish. So there's way more calls that are being bought than puts. And you can just at glance look at it and say, hey, listen, the derivatives market is quite bullish because derivatives traders are buying up a lot of calls and they're expecting for the price to go higher so they can collect the money, right? But in the article that Forbes put out, that might not be exactly the case. There's an article that came out on Forbes. Bitcoin derivatives volume suggests institutional players are here, but it's not signaling what you think, which is basically expecting the spot price to rise, and for those people that hold calls to essentially make money on that. Specifically, the section I'm talking about is Alternative Vantage Point from Zach Lee of Barada Capital Management. We know this guy very well. So he explains it pretty well in terms of, okay, so at the end of the day, derivatives and options can be used as an insurance, right? And they're a tool as an insurance to hedge. So meaning if there's the way, there's a lot of calls that are being purchased and the put to call ratio is really down, then you're saying that, hey, maybe these institutional guys are buying a hedge for a short position that they're holding, in the futures markets. And, we look at CME quite often, right? The commitment of traders, and we see the short positioning that they have over there, so I wouldn't be surprised that they're hedging some of that short exposure with the call options. But at the end of the day, if you look at it, some of these sophisticated market makers and so on, they tend to find alpha in spreads. And if you look at it, just bare bone like headlines that come out on these crypto news sites where volume is picking up for options, calls are being bought up like crazy, and everybody's just like, wow, we're gonna moon, that's it. But that's not necessarily the case. So overall, I guess the question and the kind of feedback on this, like, what do you guys think of what's going on with derivatives, and is it helping the market, or is it not helping the market? Is it just, the institutional players are getting in, and everybody's excited, all right, that they're getting in, but will they actually pump the market, or do they actually don't care about the price action itself?
Yeah, I think when you look at a lot of the trading that goes on, more of the active trading from this institutional lens, you see that people are able to not only hedge positions, but also get paid to do so, which would not be the case in the traditional space. So, specifically like the CME versus Deribit, right? In this concept of a funding rate. So the CME gets paid no matter whether or not you go long or short. The house always wins on that front. Whereas if you look at a Deribit will offer this funding rate, which is a way to incentivize folks to go long or short. And traditionally, over time, the funding rate will pay shorts more than it will pay longs. So you can use options and perpetual futures contracts to sit short and also hedge this short exposure with call options, or some of the things that Zach's talking about in that article with these call spreads. And what that allows you to do is collect that funding rate on your short, while also ensuring that you're not going to get completely destroyed if the market pumps to 12 or 13K. And you can get more and more sophisticated with it, where you're able to collect this funding rate over time, and also, actually make a significant amount of money if the price pumps to a certain level or stays within two certain levels. So, it's another kind of classic example, I think, of as crypto becomes more sophisticated and the folks within crypto become more sophisticated, you start to look past the title of the article that says, hey, put call ratio is 0.3, right? Like everybody, all the guys who know what's going on, right? They're super bullish, and it's not necessarily the case, right? They're gonna make money if Bitcoin jumps to say 13K or whatever, but that doesn't necessarily mean that they're bullish.
Yeah, lots of times, those guys actually do these type of setups to bet on volatility that will essentially come in. It's fascinating to think about that. It's like the funding pays, and essentially like you can kind of roll your insurance multiple months until maybe the dip when it finally comes. When you have funding that's kind of offsetting some of those calls as far as the premium that you pay for it. So did you
I mean, you guys are obviously a little bit more into options and things like this, so I can't really speak to the extent that you guys are speaking. One thing I would say is I listened to a podcast, I think like a month ago. I sent you guys the link, and just finding like more micro cap tokens where these big institutional players actually can't access that market. That's where you're going to find maybe a little bit more returns if you're a small retail investor. Now, obviously, the money you yourself can put into the actual token or the investment is not as much, because you'll get stuck, throwing the market up 50% just if you're going to try to market buy that shit, even at like a 10 to 20K rate. But just finding, investment opportunities where these big investment players can't get in, I think is like definitely a good thing to do if you have the bandwidth to do your research and figure out what's coming up in the market and different things like that. So
yeah, and a key obviously is on that point, right, the thought that with more institutional folks coming in, with more your sophisticated traders and a larger proportional amount of the total volume or open interest being those folks who are kind of hedged out either way, is that it should over time decrease volatility.
Yeah, exactly.
Right? I mean, that's obviously
price discovery.
Yeah, that's one of the big complaints from your larger Wall Street desks, is that volatility is too high. The market isn't liquid enough, so thus it can be manipulated. And if you think about even the CME, right, it's not crazy open interest, but there is some risk there, right? If somebody can theoretically know where a desk is positioned and then kind of hunt that out, you can increase volatility dramatically, and then that's going to affect the market across the board, which is going to thus further increase volatility and mess with all these liquidations and run into potential actual volatility issues for the market there. So it's a different way to trade, right? There's a lot of kind of free alpha out there, as people would call it, where you can get your 8% lending your stable coins, or you can get your 15%, just collecting funding. But for now, I think the majority of folks in the crypto space, especially kind of more on your casual side, are focused more on, like you said, Q, your outsized returns, right? If I want to get 5% a year, maybe I'll throw some money in my 401k. But if I want the chance to make 50% or 100% or multiple times my money, then crypto's kind of where it's at. So
gotcha. Yeah, Manos has a question for you. Dimitri said, why do shorts make more money?
Yeah, well, that's the beautiful thing about being a bear. No, but so to still answer your question, it has to do with the way futures product is structured. So we're talking about funding that he was referring to, the funding, how you typically default funding 0.01. It's positive, so meaning that the people that go long, they pay, and those that go short, they receive that. The reason why the funding exists there is because it has to do with contango and backwardation in futures. So if you want to learn more, you can Google that. And most of the time, the market is in Contango, and it has to do where, all right, where is the futures prices compared to the spot price, right? And as that deviates, you have the funding that's supposed to balance it out, where you have funding, or you have basically the futures price as close as possible to the spot price, and you're trying to keep it within the bands there. So it's it can get a little bit complicated, but that's kind of the idea there. So the majority of the time, the market is in Contango. So that's why we have that flat funding rate of 0.01, and therefore on the longer time frame, that if you hold a short position, then you collect in that default funding, or sometimes it gets even skewed if BTC goes on a bull run, and the futures market price outpaces the spot price by a lot, then the funding gets skewed to pay shorts more. And then, hey, you buy some options, capture that upside as BTC is going higher. So that's kind of the idea behind it. But good question.
Yeah, for sure.
Go ahead.
No, I was just going to say, I mean, if you look at and do the math on the average funding rate, kind of your quote unquote default funding rate of 0.01% on most perpetual futures contracts, this accrues every 8 hours. So 0.01 times 3, because there's 24 hours in a day, you're gonna get at a 0.03 funding rate, which when drawn out over a year, is over 11%. If you kept that, if you kept that hedge there constantly, and obviously that's going to vary, right? The 2019 funding rate average, I think, was a bit less, but on a 2x short, kind of hedging yourself out a bit there, it was something like 19% last year. So you can kind of trade, and you can try to make your 50 or 100%, your 2, 3x, 4x, but those folks who are managing more money, who have access to these funding rates, if you can pick up 15, 19, 25%, whatever it is, and even go further to use leverage in a way that allows you to increase that return, there's a lot of kind of free return there relative to the amount of risk you're taking, and that's why folks are doing it. I mean, if you look back, June 2nd, I think over the last month was the craziest time. There was a period where on Bybit and most other futures exchanges that offer this funding rate, the funding rate jumped to almost 0.2% across the board. So it only existed for maybe 8 hours, so only one clip. But that is, if you hold a massive multi-million-dollar position, even 0.2% is a ton of money that you're basically making for free for taking very little to no risk there. So it's kind of the more you know, right, Q?
Yeah, absolutely. I'm here. I'm listening. If you guys have more questions, sorry, I'm just managing what we got going on. But if you guys have more questions too, hop in the Telegram chat. We'll all the answers you're getting here from Mike and Dima, like they will take time out of their day to answer that in text form so that you can really break that stuff down too. So if you guys do have extra questions, please come in the chat and then ask these questions. We appreciate them. So on to the next discussion piece here. I think we hit about. I think we're at 17 now. I think we peaked at like 20. So we appreciate you guys all in the channel here. We're in our discussion. We will get to Bitcoin, Ethereum, EOS, and DeFi before we wrap up the episode here. But the next piece is a tweet by Chris Burniske. I will put it in the chat here. But basically, TLDR here, it's basically asking whether we're going to see another alt season that goes along with a Bitcoin all-time high, right? So basically, he's talking about the ETH-BTC pair. He says if BTC goes to greater than 50K in the next cycle and ETH-BTC returns to its former all-time high, then expect to see ETH at 7,500. So basically what he's saying is if BTC decides it's going to go on a run to 50K, are we going to see potential altcoins, specifically ETH for this discussion, follow in its wake for various reasons, right? And he laid out some reasons in a conversation with Ryan Selkis from Masari Capital. And I want to get your guys' thought process because Ryan had some good points and, Chris came back with some. He said, I'll go ahead and give you guys Masari's take here. He said, as a trade seems unlikely, ETH would need to win on a more fundamental level to hit that again. And he used 3 points. Pressure from competitive layer 1 chains will sop up ETH demand. You can't replicate the ICO bubble. ETH was a sole reserve for tokens last time. Now we have USDT and USDC. To which Chris came back and said, ETH will sop up capital from most layer ones as many will remain immaculately built ghost towns. And you guys can follow along in the tweet. But he said not the ICO bubble, but another capital formation bubble will happen. Standardized by code, legal with ERC20. He used DAOs as an example. So based on that small conversation, there's so many different points that go along with maybe ETH's rise in as we see Bitcoin kind of hit 20K and beyond. What do you guys make of kind of Ryan's as well as Chris's point on whether we see ETH at those levels, primarily for like fundamental reasons that they laid out there?
Yeah, it's always interesting to see these type of tweets where somebody just comes up with the price and speculation. It's kind of the speculation juice that people really like, so. They put this out, and it's like the chief price estimators,
that, man, I was gonna use that.
I know. So it's like it's trying to predict, like, okay, what is going to happen to ETH if BTC continues to rally to those levels, and they make good points, obviously, with the ICOs and so on, right? But ETH does have a pretty good segment of the market in terms of stable coins. That continues to grow, and if global economic thing still remains kind of the same, where the demand for the dollar would be there, and people will be restricted buying, then the demand for stable coins should be going up, which should translate in some ETH appreciating as well. But as far as the competitors go for layer one projects, I think I think there's absolute truth in terms of those that are ghost towns and waiting for people to move to build on. That is absolutely the case. We haven't really seen ETH competitor that's really making waves where it's like, wow, these guys actually have a chance at doing this. So I'm not sure, but to be honest, like at those levels of ETH, the speculation level would be very high compared to probably the use case of actual ETH in the market. So it's all about the narrative that you're trying to push. For
sure. Yeah. The chief price estimator is something that we came up with last year during Consensus in New York City, basically where we, had quite a few drinks and went through and ran the same exercise where we said, okay, well, if BTC pumps by 10x based on how much alts pumped, 2 years ago,
that's after so many drinks.
How much will this like shit coin? It's not even traded anywhere be worth? Oh, it'll be worth $1,000, and it's really tough, especially in such a nascent market like crypto, to say, hey, this massive bubble that happened 2 years ago, and based on the pump relationship between two assets that still exist today, right? If one pumps by this much, then this one should be at this price. Like it just, the market doesn't really work like that. And the way that price is factored doesn't work like that. So I kind of see what he's getting at, right? I think it's just more of one of those things like, hey, how can I get some, interesting discussion going on Twitter, right? What are the chances that ETH, breaks its all-time high, if Bitcoin breaks its all-time high, and yada, yada, yada. I mean, at the foundational level, Bitcoin tends to move other crypto assets because, the correlation has been so strong in the past. And the concept, I guess, is that as people make money on BTC, they want to then take some portion of that or all of that and flip it into your smaller projects that, potentially have a chance at a much larger all-time high. And that's really what we saw with alts in the 2017 bubble. People had been in Bitcoin down towards your $100, even few $1,000 levels. And when you go and your assets, maybe put $1,000 in and you get 5 or 10K, and you're kind of at these all-time highs, you think, hey, this isn't gonna end. So everybody said, okay, well, the Bitcoin train's over, right? We just hit 14K or 16K or 20K, but what else is out there that hasn't pumped yet? And you get enough of the quote unquote herd moving into tokens like Verge or at that time Ryblocks, which I think is now Nano, right? All these just small little projects that don't really have any real business or use behind them, that liquidity is so low, you can, with enough buy demand, you can just pump them to the heavens, and it kind of ends up being this self-fulfilling prophecy. But ETH in regards to other layer ones is obviously way in the lead. I think anybody who denies that is really not kind of admitting to themselves that perhaps they have some bias based on the bags that they hold. I mean, every metric on chain, off chain points to the fact that ETH is ahead. I think potentially the only real project that could do any damage to ETH is Polkadot. But they've got so far to go, with the launch and everything coming up. I think, and even then, right, it's like it's probably something that the price could do versus the actual fundamentals behind a Polkadot. So yeah, I mean, could we see ETH at an all-time high if Bitcoin breaks their all-time high? Its all-time high, probably, right? It's probably be the case. Whether it reaches $7,500 or not, who knows? But I would much rather bet on ETH than a lot of these other layer ones. I guess, maybe that's a good place for me to leave it.
Yeah, I mean, a lot of innovations happening on ETH, and you can make the argument that it's going to continue, and the more that gets brought into the Ethereum ecosystem, it's just like that flywheel effect. It's interesting that he brings up like capital formation bubbles happening on DAOs. Like, do you know how early we are in that process? That for him to kind of like use DAOs as a means by which we're going to see another ETH bull run, or like some like altcoin bull run is kind of really putting the cart before the horse a little bit. So I agree with maybe Ryan's like first take, where he was saying that you can't replicate the ICO bubble and what was happening at that time. I did kind of want to throw something in here for you guys, because it was just like a shower thought I randomly had. But the amount of money that's been pumped into Robinhood was kind of the meme that you got in 2017, with just like random non-crypto users getting in, throwing whatever they had on Binance and just pumping it. What do you think? Do you foresee, because how do I form this? Do you think Robinhood's success over the past 6 months to a year with like just general retail investors kind of canceled maybe an alt season that might have happened? Because I feel like the Robinhood-esque situation didn't exist during the last bull run, or at least it wasn't popular to get on this app and trade stocks. I mean, it was obviously there was access there, but I really feel like the retail investor has kind of like jumped into this Robinhood app. Like my cousin is buying, bullshit, like
bankruptcy stocks.
Just bankrupt. Not Hertz I'm not going to throw Hertz under the bus there, but just, bullshit stocks on essentially what people were doing with ICOs and small cap crypto projects in 2017. What do you think that might have been flow that we would have seen gone into crypto had Robinhood not existed?
Maybe. If not Robinhood, I think it would probably be another app, right? I think the scenario between Robinhood and crypto is kind of one of the, fool me once, shame on you, fool me twice, shame on me scenarios. I think a lot of people assume that new folks who are not in crypto yet, who saw what happened in 2017, if Bitcoin breaks 10K and reaches 11 or 12, are just going to jump in thinking that there's not going to be enough time, to get in. Whereas from what I've seen from the group of friends who saw the craziness in 2017 with Bitcoin and ICOs, their mindset has completely shifted. Their mindset has shifted from, hey, what is this brand new technology? I don't really understand it, but it's going like, price is going crazy. It's up $1,000 every day. I better buy a ton of it now before it hits, 50K or 100K, right? And then you saw the same concept happening with altcoins. But when that, as that conversation comes back around, the mindset then becomes, well, Bitcoin's at 12K right now, and I saw it go all the way down to 3. So if it gets to 6, I'll buy some more, right? It becomes much more of kind of your next step of the investment process of, hey, I FOMO'd in. I'm not going to do that again. I lost all this money, but I saw it drop down low. I saw a bunch of people buy it at these low prices, so I'm going to try and buy low, sell high. And it's just, I think, kind of a natural education that especially, your millennials have at this point, those who aren't in crypto or aren't in financial markets full time, kind of slowly learning and figuring out what it means to invest your money in other ways other than, an IRA or a 401k or something like this. And a lot of these folks, maybe haven't been day trading stocks, and maybe this is the first time that that they say, hey, oh my goodness, here's some app like a Coinbase in the form of Robinhood that I can go in and, instead of altcoins, now it's options, right? And I can put $500 into these 50-cent options. And if by some miracle this company pumps, just like I saw my uncle, get in, he's going to turn $500 into $50,000. And that wave continues to happen, and you get this self-fulfilling prophecy where literally nothing has changed, right?
Mm-hmm.
Like in the Hertz scenario, they just got approval from a judge that says they're allowed to raise funds via Robinhood for their company instead of going through the traditional bankruptcy proceedings that you would have. So Hertz is selling worthless shares to investors for a company that has gone bankrupt and already had a model that was selling like was allowing you to rent like a Chevy Cruze for $280 a day. With when you can get an Uber for much cheaper, or you can go to other apps like a Sixt and rent a Mercedes for half the price. At what point, my question would be, at what point do then you see the fall of this happen, right? Mm-hmm. And folks make enough that they kind of pull out, or they start to lose a little bit of money, and this wave slows down, and now same thing happens, right? Instead of your retail holding all these random altcoins that they never sold, now they're holding shares in Hertz, which doesn't exist anymore. And it's kind of like, okay, same phenomenon happens there.
I just can't talk about that Hertz situation with a straight face. Like, come on. Yeah, and it's interesting also, to the point where you're saying, eventually it's going to start like unwinding, and some of those retail guys are going to get hurt. Also keep in mind that if you have, these like groups of retail that are piling in, understand that those guys usually have pretty weak hands once things go south. So that increases the volatility. If the price action goes against them, they start dumping, right? They get burned. I have a story from a friend that got into, he actually became a really good FX trader, but when he first started out trading, he started day trading stocks. He made like 25 grand, and he was like 17 or like 18, I don't remember. And he thought he was the top of the mountain, like he's the king. That's it. I'm a day trader, like blah blah blah. He lost all of that and more. Got back and actually started learning the game, understanding it, like, and became a very efficient day trader. Now, but that's obviously not going to be the path for everybody. And those that are saying, hey, like, man, what are you doing? You studied this finance stuff for like so long, and like this stuff is so easy, like, dude, I just flipped like this, I bought the stock, and just came up this much. And you're just like, bro, like, don't get too ahead of yourself.
Take some profits.
Yeah, just take it easy. If it was that easy, why wouldn't you do it? Why everybody wasn't doing it before? Like, it's like there's a lot of interesting things that are happening. And to say like, hey, okay, so if we know that it's going to happen, then we should, expect the market to go down, short and blah, blah, blah. But you have to keep in mind that markets can't stay irrational, right? For a long time. They can have these type of things, longer than stay solvent, so picking the top and bottoms are usually where you get hurt. So this circus can continue happening, And
it's not to say that like another bubble won't happen in crypto. Probably will, maybe not as large as the ICO boom. To answer your question there, I think the next boom will have to do with interest rates on crypto, because you're getting these wild stablecoin rates, and it's, you could almost compare it to a lot of the IPO craziness that we've seen over the last few years, or some of the valuations that a lot of these not unprofitable companies are getting, right? Like DoorDash just successfully got a $15 billion valuation. Or Uber obviously is a prime example. Groupon's another great historical example. So even if a lot of these stablecoin providers or these DeFi companies, all the various participants in the space that can offer these crazy rates, if they start to see a new influx of money coming into the space and understand that there's kind of this scheme of sorts where, hey, if I keep increasing my rates, I will get more capital flowing in, which will allow me to last, X much longer at these rates, then you kind of just keep increasing the rates until it doesn't work anymore. And I think that the bust does not become necessarily a token falling in value necessarily. I mean, I'm sure that will be part of it too, because in the case of like a DeFi rate, you have to buy the token in order to get access to that rate. So there will be some of that, but you know, the case will be, hey, I'm offering a 40% interest rate if you just hold and stake my token. You know, that if you can't keep handing out that interest rate and that peg breaks, then it all falls apart. Right? Because at the end of the day, it's a confidence game.
It reminds me of the Saudi US situation with oil, where like Celsius can go out and raise like 100 mil, maybe offer a rate that's like double what BlockFi might have, be able to put like almost BlockFi, if they give a rate that's double, you're going to see a lot of users move over to Celsius. And I wonder if that situation, that move can actually like be fast enough and quick enough where Celsius could lower their rates to still above whatever BlockFi is doing. There's just a situation there where I feel like you could raise enough funding to eat maybe the negative like revenue that you're taking in for a certain amount of time and kill the competition.
Yeah, for sure. I mean, that's the Amazon model to some degree, I guess, right? Or the Walmart model. You know, you just offer the cheapest prices for so long that you ruin your competition, and then as you slowly raise prices, you kind of make that money over time. So it's that longer term thinking with kind of your shorter term your shorter term tools. But when I think naturally you get to a point then when the shorter term tools just become, it only ever is shorter term tools, right? And there is no longer term plan. And you saw that with ICOs, right? Where the whole focus was on raising a shitload of money and launching on an exchange so that the token would pump. But there was no plan like past that, right? That was the end of the roadmap.
Building the decentralized enterprise platform.
Marketplace, So, you know, it's a wild world out there right now. This obviously, none of this is obviously financial advice. Be safe out there. It's a crazy economy and crazy markets.
You know, speaking of the shower thoughts, you know, the one that I really had, wouldn't it be really ironic if, you know, this time that, you know, the retail crowd was cheering like, hey, why you guys are bailing out corporations? We should get bailed out. Now retail got bailed out, right? Got their checks and they're like, okay, we're going to spend that money and send it to corporations and invest in them. And then those corporations tank, you know, which is like ironic. Like retail did get the money from the government this time, but they ended up spending on corporations, you know? So it's like, oof.
Yeah. It's tough.
Yeah, it's a tough world out there. Guys that are listening along, it looks like we peaked here at 22, so we appreciate you guys showing up in the chat. We have a ton of comments. I don't even know if I can get to any of these. Did you guys see any that maybe stuck out to you that you want to talk about? I think when we were speaking on ETH, talking about how ETH 2.0 is kind of factored into that maybe pump, as we see like staking, for example, working its way into the economics of what happens to ETH in the free market. So you guys see anything else you want to hit? Because there's a ton. I don't want to go word for word here. Manuel's in the chat. What's going on, man?
ETH 2.0 is obviously the giant catalyst for ETH. You know, to get a lot of press around ETH in the same way that the halving is a way for Bitcoin to get a ton of press and bring in a ton of folks who maybe weren't involved beforehand. But you know, ETH has to execute, right? They were supposed to come out with this phase 0 in July, and a handful of weeks ago, Vitalik said, well, you know, I never promised July. July isn't happening. You know, we think by the end of the year. So, you know, if they come out with just phase 0 at the end of the year, that's a year behind, you know, at least already that they are there. So, you know, I doubt anybody can compete with ETH as long as they can maintain, you know, the giant community and developer base and you know, kind of projects that they have building on ETH. But at some point, like, you do have to execute on the plan, and we haven't seen that yet. So
yeah, sure,
that's the gamble.
Yeah, definitely. I think we had a conversation in the Parada chat today too that said something to the fact of, if Robinhood traders that are now just like all the retail traders are have the opportunity to buy up these bullshit stocks and shares, if they get wrecked, there's no money that's going to be flowing from retail into crypto if those same traders, you know, lose 80% of their funds. So that was a good conversation there. We got a bunch of people in the chat. I got to give a shout out really quick as we go along. Hekadoth's in the chat. Ola Art, Manos is in the chat. Adriana, what's going on, Adriana? Nice to see you. And we got a bunch of people saying ICOs are dead. Microcap projects are where you make the gains at. Truth, man. I appreciate that. So we got one more discussion piece here, and then we'll hit Bitcoin, we'll hit Ethereum, and we will hit EOS and DeFi to finish up. So we are at 74 minutes just to give a quick update.
Yeah, this is quick. This talks, a lot about what we were talking about before. Kava, we had them on it many episodes ago. Kind of a more under the radar project, but they have officially launched their new DeFi platform, which focuses on using the Cosmos SDK to allow for some of your more non-traditional assets when compared to your Ethereum-based DeFi competitors. Most DeFi platforms on ETH use ETH. Now some of them are using USDC and a handful of other kind of ETH-focused types of collateral, whereas Kava has focused on the opposite. In launching this DeFi platform, they're going to have, your BTC, your ETH. I think XRP is there. And in launching, they also added BNB as collateral. I would imagine based on the Cosmos and BNB relationship that exists there with the Binance DEX. Cosmos' biggest sell right now is their SDK and kind of the easy use for developers. And as we'll talk about later in the episode, they've done a good job of boosting the amount of developers they have building alongside Cosmos in some way. So anyway, Kava has launched. They'll have their own stablecoin, USDX, which will also be used in that system. But there is an outlet for you to lock up your BNB or your XRP, and I'm sure they'll be adding other assets to the DeFi platform as it goes. But kind of my broad question to you guys, and we can keep it quick here, but are you at this point understanding where any DeFi platform is, whether it's Maker or Kava or Synthetics or any of these, are you comfortable putting your money into one of these DeFi platforms, understanding that there have been so many hacks and exploits going on?
Yeah, I mean that's a very good question. I think there are two kind of main players here that would use something like this, right? So it's like one, it's like you have kind of the retail guys that are technically savvy and like into this, right? They want to get into it, they see the value there, blah blah blah, right? The regular people, retail guys, for them it's too hard to wrap their heads around of this whole DeFi space and how all these stuff works, and the benefits that they get is not really something that would incentivize them to participate in it, right? But like the second side of it, would be actually something that goes on, let's say, with certain platforms that actually need this type of conversion that's done in the back end for users, and users don't really see that, right? So it's the it kind of gives a platform the ability to do stuff on the back end more efficiently with the conversions and so on, right? Rather than pushing this and saying, hey, the retail is going to actually go through all these steps and do it themselves. So I think it's on the back end, it's going to be helpful for those players. But yeah, in terms of security, obviously there has been issues there. It's been exploited, but it's kind of, if you talk about it, well, did it die though?
Did you die though?
Some people died. Some people got wrecked in that.
Yeah. So
maybe
it's still, just to wrap it up, like it's still around, it's still progressing. We should have, actually, I talked to Kane from Synthetics recently. We should have him back on our podcast to talk about the progress that they're doing there. With all the things.
What do you think, Q? I'm gonna let you answer while I go pee. I'm dying over here.
You made it through a ton of episodes, so this will be your one pass. So basically, man, to answer your question, I think no is the general consensus there. I think what you have with these DeFi situations is that there are going to be a small amount of people making a good amount of money. But I agree, like where it's at right now, it's not going to be mainly adopted. But I think it goes along with this personal token discussion too that we had early on. It's like not a lot of people are going to use this, but right. There's a ton of things, and I use things to say something very broadly, but there's a ton of investment opportunities. There's a ton of applications. There's a ton of just just things in regular day life that are used by people on like a very small scale, but they still make money, right? Like,
Right.
so there's a market for Beanie Babies, right? There's like there's markets for all of these things. So saying that maybe I don't understand it, or that there's a smaller market, like there's going to be situations in blockchain and crypto kind of provide for this process to be carried out, but there are going to be all different types of communities that revolve around all different types of assets. And will it ever be mass adopted? I don't think so. But will it have enough adoption for people to make a good amount of money? I think that will be the case. So from the security aspect, no, I would not like lock my funds up in a DeFi contract at this point in time. Will there still be really savvy investors that can make a lot of good money from this? Just like a savvy investor can make good money from a swapping a Beanie Baby. I don't know about that stuff, but there's somebody that's going to make that type of money. And I don't mean to be kind of comparing DeFi to Beanie Babies, but that's what I mean. I love how Mike comes back and that's the first thing he hears.
Yeah. Beanie Babies.
Yeah.
This just evolved.
Well, yeah. And Manos makes a good point. He says those markets are not worth 265 billion. Fair point. There's going to be markets that have more scale than the examples that I gave. But my point being, there's small communities for every type of thing and asset and all of this stuff. And savvy investors are going to make good money at it. Whether it gets mass adoption, I don't know. But Mike, to answer your question, I would not lock my funds up in a DeFi contract up to this point.
Yeah, me neither. It's I think that's why you see CeFi with so much more. But anywho, moving on, we've got one piece of Bitcoin news here. We got 4 pieces of ETH news, 3 pieces of EOS news, and then a little bit of more DeFi talk. But before we get to all that, there's an interesting article that came out from the block here about Bitcoin miners.
Yeah. So, we obviously talked about the hash rate, the miners' revenue, how it was impacted by the halving, whatever you want to call it. But the article that came out from the good old block, Bitcoin miners made 366.4 million in revenue during May, despite the halving. And they talk about basically how the May revenue is just 11% down from the April revenue, which is, before the halving. And trying to basically assess, all right, what is the damage to the bottom line for these miners, see if it's going to steer up the capitulation and whatnot, right? Based on the research that they did, they're saying that, hey, the revenue wasn't impacted as much as, the actual reward was cut for mining. So it's kind of being held up. Miners are still making money, but you have to also consider a couple of things we've talked about in the past, where it's like, okay, well, there's more efficient mining equipment that's being available, become more available in the market now. So miners can get that to stay competitive. Perhaps some miners that get it out and just shut it down, and the market is kind of consolidating there. The big players are able to compete because they have better equipment to mine, and also they have access to cheap energy. And we know that the energy costs have been kind of going down in general. So all those things to put together, you can see how that can alleviate some of the pain from the fact that the rewards got cut in half. It'd be interesting to see if that's obviously going to continue to happen for the miners, if they can sustain the revenue numbers that are showing that we saw in May. Continue to see that.
The one thing about this article that kind of threw me off was that the figures they're talking about are based on an assumption that miners are selling their Bitcoin holdings immediately. It's pretty safe to say that is not the case anymore, at least for the larger Bitcoin miners who are much more well capitalized versus the halving in 2016. They're able to treat the business much more, in kind of a steady way when it comes to their cash flows, right? They're not, again, especially the larger ones, not forced to sell Bitcoin immediately in order to pay for electrical expenses. There's a giant lending business that exists now for miners, so that they're able to use that, both the current Bitcoin they've they've mined, presently, the Bitcoin they mined previously, and the Bitcoin they're, set to mine in the future as collateral for these loans, in the same way a lot of other, more traditional businesses would. So I get it, right? I kind of get the implication and the assumption, but I don't think it's a fair assumption to be made at this point. 2016 after the halving, maybe that's fair, but I think the larger concern around the Bitcoin mining conversation is that as we go and as we see more halvings, and as you can see on this this chart, what happens as this subsidy continues to decrease, and assuming the price remains volatile, what happens to miners in the overall profitability of mining? Mining Bitcoin has to stay profitable theoretically for those miners to stay online, and if it's not profitable and you don't have anybody mining, then you run into security issues. I think as long as obviously energy cost continues to decrease and you can kind of battle underlying operating expenses against this decreasing subsidy, or if all of a sudden fees just jump like crazy, right? That's the other option. Then it's okay. But I think that's kind of the larger discussion. And yeah, so that's my thought.
Yeah, no, it's definitely a good point. You can do many different creative things in the background. And, back in the day, miners would even sell the Bitcoin right away because they would think that it would moon, or sit on it. But there's definitely a lot of hedging stuff that can be done to lock in the pricing.
Yeah, there's definitely a lot of ominous token economic like situations here with the mining that can be pushed down the road, give or take 80 years with Bitcoin. But it will be interesting to see, as we get close to that point, when we go through another halving, all of these different things playing into effect, and seeing how Bitcoin security can kind of be in the mix here. Manos did have one point. It looks like he's kind of a DeFi proponent here, which at Layer 1, we're DeFi proponents as well. He says the idea with DeFi is that we can give great service to the third world by bypassing their pointless governments. So I think Mike, if you have any thoughts there, but my thought process here is making sure that we make the understanding that those things can happen through a centralized platform as well. Like Libra is a great example of having a situation where that can probably be done quicker, better UX, UI, and just more just easier for that individual that you're talking about in maybe third world countries that need that situation to play out.
Yeah, it's third world countries, who maybe don't, or other countries who don't have access to the same CeFi platforms, right? That's a big one. If Celsius or BlockFi are only able to, offer their platforms to certain countries based on those government regulations, then DeFi comes in as a potential solution, and you don't really have a conversation around what's better, CeFi or DeFi. Another interesting point along Mono's point is that there's a giant kind of regulatory arbitrage of sorts. I guess maybe arbitrage is the wrong term, but there's this concept in the East that I don't think we get in the West as much, where people in the East are, see larger counterparty risk in CeFi platforms that have regulatory oversight from the US or the UK or, a lot of these other Western governments. They see more counterparty risk there than they do in a DeFi platform or in a Tether-like solution, where there isn't necessarily one overarching government body that can all of a sudden say, hey, we're going to just take your funds, right? So it's kind of the risk of the hack or the exploit versus the risk of the equivalent, obviously not being a hack or an exploit, but being the state of New York coming down and saying, hey, BlockFi, so-and-so user from Iran or China or whatever, we believe they're doing something illegally, so freeze their funds. And, it's not directly a hack, but the US government's taking your money. So, someone at the end of the day is still kind of taking your money. So I get that argument for sure. Definitely understand it. Can empathize with that. I think DeFi in the future does have a market fit there. So.
Yeah, and I think it's following the arc of kind of crypto in general. I think it's just like there needs to be that infrastructure laid out where people have been in the space developing on it. Because right now it's just like Dimitri pointed out earlier in the episode, it's just too hard to use for that end user that you're talking about. It's absolutely like just gigantically too hard to use from a user standpoint. So,
and as the final point, I think we're going to come to we're going to come to a time when it's kind of the lipstick on the pig is wiped off a bit, and we realize that most of these DeFi platforms are DeFi platforms.
Mm-hmm.
You know, if people can prove that criminals are using these DeFi platforms to launder money or something, then and there is some sort of organization or foundation or team behind it that developed the code and is not anonymous, and some government or collection of governments goes to them and says, hey, we're either going to lock you up forever,
Mm-hmm.
you know, in a tiny, you know, in a small hole, or you can shut all this down and give us access to these funds. Well, what is a Kane going to do? What is you know, a Rune going to do at Maker? Like, what are any of these guys going to do? You know, if they have some button that can shut off the system, or they have some ability to freeze those funds, then that's what's going to happen. So, you know, it's kind of a reckoning point, I think, that a lot of people understand will happen to DeFi at some point, in the same way that we see the reckoning happening with ICOs over the last few years, where, you know, yeah, it's a utility token. And then it's like, okay, well, you raised all this money illegally, so we're, you know, you're going to give it back and you're going to pay us a fine, and kind of welcome to the real world of things there a little bit too.
Yeah, that's interesting. I wonder if they would go to that extent, because I guess the Block One is a bad example here, because you can't shut off EOS.io because it's open source, but they didn't make Block One even have that option, essentially, of trying to like shut down all things. They kind of just went to them and said, hey, and now I'm generalizing, right? This was a process over a long period of time, but they were like, hey, pay a fine. So I wonder why they wouldn't go to Kane and say the same thing instead of having him shut the whole thing down.
Well, it's different if you are offering or managing or maintaining, or at some point have created a system that allows for criminals to use it for money laundering or terrorist financing. That's drastically different than running an unregistered security sale, right? It's you know, apples and oranges there. You know, they're both in crypto, but both very different when it comes to government oversight. One is much more at the
Love it.
you know, kind of Patriot Act level versus the
terrorist
SEC level.
You're
Right.
throwing out the terrorist term. Yeah, all bets are off. Okay, awesome. Well, we'll hit Ethereum here. I moved the pointer over here a little bit ago, but for those of you that are looking for Ethereum news, we have it for you. So the first thing we're going to touch on here is Ubisoft. They launched this lab, this startup lab, where they're like kind of working together with a bunch of like really small startups, where their teams can kind of go in, work with the founders, so that they not only can help the startups and really just push that sector, but also kind of gain knowledge for Ubisoft. They can take that back and go and develop things in the Ubisoft studio. So this was developed, I believe, 2 years ago, and on their 5th season now. I'm sure there's been multiple seasons annually, but it looks like within their 5th season here, they announced 8 startups this past week, and one of them is Axie Infinity, which has developed that kind of like, it's Animal Crossing. Am I saying that right? Animal Crossing in like a Pokemon mix. Kind of like where you have blockchain assets and you're growing them and you're fighting them and all these different things. They have NFTs involved. So Axie Infinity was awarded this not partnership, but essentially an entrance into this 8 international startup group with Ubisoft. So that's a big moment. Obviously, like the details weren't exactly laid out, but the fact that Axie can go and you know, work side by side with Ubisoft not only shows Ubisoft's like want to get into the blockchain space or desire to kind of like build out these different technologies, but also it's going to help Axie by exponential kind of factors, right? Because you have all of Ubisoft's experience. They can utilize their resources, leverage their resources to whatever degree. But we'll see Axie develop here over the next months, years, and we actually have them on the podcast this week. So it'll be interesting to hear from Jiho himself what's going on with this startup lab.
This Xaya game, or I think that's how you pronounce it. It's spelled Xaya. Looks pretty cool out of the UK too. It's a blockchain-based MMO RPG kind of setup, you know, where there's this at least in this announcement, going to be a fully decentralized world, where you can compete for resources and all this different stuff. That's definitely fascinating to me on the kind of decentralized gaming level. I saw a tweet a handful of days ago that was someone who was in a decentralized game who then went and played a game within the decentralized game, who then within that game, played another game.
Oh my God.
So it's like, how deep do you want to go down the rabbit hole when it comes to kind of,
the metaverse?
Yeah. Metaverse and finding resources and selling resources. And it's just, it's never ending. So
yeah. Yeah, I think it's great to point out that Ubisoft is involved here, because we've had games like Zaya is producing that Torian MMO. That's and we've had Neon District for a long time, but they need to be, these smaller teams that are building these blockchain MMO games specifically need to be involved with the big AAA studios, right? Like it just needs to happen. And I think eventually the AAA studios will eat the little ones. That's just like my pragmatic approach there. But I just in the short term, it'd be great to have these smaller projects. Their development's going to see a 10x increase just because they're working with these big studios. So yeah, huge, man. So I guess I'll touch on this really quick. That Ether mining pool that received the 2.6 million fee transactions that we were talking about. We kind of touched on this earlier, but basically this mining pool, let me get the exact name. Ethermine controls 21% of the hash rate on Ethereum. So obviously they were a part of this little transaction fee. They're going to spread this out amongst all of their pool, and they're only going to, I guess, wait 4 days to see if this stuff works out. So there's been a ton of blowback from the community. A lot of the community wants them to obviously hold this transaction fee and maybe send it back to where it comes from, but they look like they're going to wait 4 days if no one contacts them, or they don't find the person who actually has the transaction key or the authentication key for the account that was sent to for the transaction. They're going to disperse this amongst their pool. So that's pretty much it.
Take it for what it is, I guess.
Yeah, it's definitely worth it to point out too that this 2.6 accounts to, I believe, 5 days of normal mining. So that's going to be obviously spread out. It's not going to one person within this pool, but once it's spread out amongst however they're doing that, it accounts to 5 days of mining for whichever miners are doing this. So
gotcha. Yeah, a lot of money there. Next piece of news under ETH here has to do with stablecoins. So the firm Coinmetrics, which is one of the more famous on-chain kind of research firms of sorts, has come out with a nice article about stablecoins and where they're at today. Stablecoins have their volumes have fallen off pretty substantially. Tweeted about that a handful of weeks ago, kind of wondering why, and somebody replied talking about how now that interest rates are so low, it hurts the stablecoin business model, where they are issuing stablecoins against what you would call on the run issuance of treasury bonds. So as those yields have fallen, it makes it a lot harder for your Paxos and your USDC and all these guys to make money on their business, right? On basically offering these pegged assets. And as we've kind of continued to see a lot of these volumes fall off, Coinmetrics has gone even further and broken down these volumes and where they're coming from on each stablecoin in this state of the network report for stablecoins. The most interesting piece here was that something like 40% of all Paxos volume is supposedly linked to a Ponzi scheme called MMMBSC, which is one of the more popular Asian-based crypto Ponzi schemes. It started, way back in 2011 with MMM Global, which was a scheme launched that peaked with almost about 16,000 transactions in late May. And, according to Coinmetrics, it seems to, for some reason, be a Paxos-specific problem. They're not really seeing a bunch of that on other stablecoins, except for, of course, on the Tron network, understanding that you can transfer and store USDT on Tron in the same way you can on ETH or Omni. I think they're looking to onboard another, maybe OMG or something as well. Coinmetrics says that 80% of USDT issued on the Tron blockchain is tied to Ponzi scheme payouts as well. So not the biggest surprise there, but of course the surprise is definitely more that Paxos is tied to this. It's great report. If you have the time to read it, dig in. It's stablecoins are something that exploded in 2019 and continued to roll in 2020, especially with Tether, basically eating up all of the volume from these other stablecoins as chaos ensues in the global economy. So, kind of crazy news there on a Monday from a Paxos who, contextually is a federally regulated, stablecoin issuer. So it'll be interesting to see if we get kind of a response from Paxos or if they do anything there that then drives those volumes down a bit.
Dimitri, go ahead, Dimitri.
I was gonna say that I actually went to go check out that the Ponzi scheme, see if there was a chance for me to participate. But no, really, I just went to their website just to kind of check it out and see what it's about. It's apparently some Russian guy came up with some kind of a scheme. He ended up passing away, and then they took his work and they put the blockchain and cryptocurrency in it, and that's the way to spin it. And you can help the people around the world by donating money, and then you get the money back. It's clearly they're pretty big in India too, by the way. But that's crazy.
Yeah, man. We'll move on to Ethereum options here, but we're talking. One of the comments, Manos is asking you to do TRX charting tomorrow, Dima. Just pointing that out. You need to hit it now.
I got it, man.
All right, cool. Let's hit Ethereum options, and then we'll fly through EOS and fly through DeFi. We're sitting about an hour and 40 minutes.
Okay, cool. So not much, in terms of ETH options. We already kind of discussed it. It's just an example of a headline that basically says, hey, Ethereum options open interest source 315%, our institutions bullish. And then it goes into talk about the put to call ratios. All right. The calls are outweighing by far the puts. So institutional investors are betting for the ETH price to go higher, so they're bullish. They look at the positioning in terms of some platforms, futures platforms, and see how traders are positioned on there. So they're trying to make a point where it's okay, well, if we see institutional investors are buying up all these calls and the futures have net long positions, then it's a bullish setup for ETH. But as we already discussed, there are many different ways you can interpret this, and interpreting this information at the face value by looking at those things, perhaps is incorrect. This is just one of those things where it's just hey, let me stir up some speculation juice and feed the bulls this beautiful pie, of derivatives and futures bullishness that people don't really understand, but they rely on Cointelegraph to explain to them why it makes sense.
Absolutely. All right, well, we'll hit EOS here. I'm going to move the old ticker over. We're going to fly through this. I'm going to start with the FUD, or maybe it's some good information, maybe it's not. Yeah, but we touch on EOS a lot here, and a lot of times it's good news. So we obviously have to report on some of the bad news here sometimes. But this comes from Decrypt, so a relatively well-respected news resource in the industry. But the first sentence kind of throws me off. It says the world's largest ICO project, EOS, may be in serious jeopardy. So that kind of threw me off a little bit. I think that's kind of a derogatory way to kind of put one of the biggest blockchain
hashtag triggered.
Yeah, that kind of triggers me right off the bat. But their data is something to look at, right? So basically, I'm going to read the first paragraph here because it kind of lays out all the data points. But it says developers working on the EOS platform fell more than 85% compared to a year ago, according to new research report from Outlier Ventures. As a result, code updates tracked on the GitHub were down a whopping 94%. Also, they go on to say that EOS DApp activity is down 70% over the last year. So I jumped into EOS Nation and everything EOS a little bit to figure out maybe what the story was behind the developer percentage. Didn't get really strong information that I could come back to you here with. The DApp activity is a little bit concerning that they kind of reported it that way, because DApp activity on every chain when it comes to any high throughput chain with all the gambling that happened probably about this time a year ago with EDOS. That's kind of like throws a wrench into it. I really don't think that's accurate information to be kind of displaying when they say 70% down, when all of that was specifically from these gambling dApps, and that has obviously slowed down over the past year. But it's interesting to report, so I had to put it in there. I think that, developer activity, I need to get more information so I don't say anything dumb, but that some of this information, is important to display to the community and display to people outside. Like if there's a lower amount of developers, and those developers are moving to chains like Polkadot or chains like Cosmos and maybe Ethereum, it's important to point out that maybe EOS needs to do a little bit better job at not only retention, but kind of attracting developers to the platform. Network.
I think like we talked about earlier on the ETH front, it's not groundbreaking research that ETH is winning the developer battle. Mm-hmm. I mean, they're ahead in every single way. If you look at some of the stats they give, Ethereum developers have released almost 2,900 dApps and more than 4,500 smart contracts versus EOS doing 325 dApps and 515 smart contracts is obviously one of the prime potential competitors to ETH. So many others are much less than that, right? Like everybody knows this. ETH has been around for the longest. They have that first mover advantage. They have this giant developer community. My biggest question on GitHub commits is always whether or not someone like an Outlier Ventures went past kind of like the first, like, hey, this is EOS.io's Git, and now that it's out, right, is that where commits are being pushed, or is there a completely different, set of commits happening elsewhere, right, when it comes to these dApps? So I think that would be the biggest question, understanding that the context is that, like, yes, many of these layer ones are in trouble when compared to ETH.
Yeah, I mean, that's a very good point. And I think some of Block One's commits that are coming from maybe the development in-house have moved to voice. So all of those commits are happening on a constant rolling basis. Those aren't commits that are getting pushed to the EOS mainnet, right? So maybe Block One's emphasis on voice and all of that good stuff has something to do with that. But no, fair point. I need to get more information on that. Maybe we can talk about it next week, but it is fair to point out that these commits might be happening somewhere else. But it's still good to point. I mean, it's still like information that we need to get and report on, right? Because that we can't just sit here and put the bulls
Appreciate
out.
You not just constantly shilling, yeah.
So the next piece of news was an interesting announcement that Wax made. So for like the longest period, and this kind of played itself out in the Layer 1 community actually, for the longest period, Wax has been talking about this advisory council. I think they announced it like a month and a half ago, that they were going to bring in all of these big enterprise people to or enterprise firms to kind of come sit on the council of Wax and really help build Wax's adoption in mainstream. And I think we got news early just from like various sources that it was going to be Google, right? Like Google was going to be their first advisory person. And you kind of saw like the small market cap token pump in price, right? So you saw this situation where kind of over the course of maybe 6 days before the announcement, the thing went like 100%. And so people were kind of jumping into this token thinking that once they announce, and not many people knew, but once that Google got out to the broader community that didn't have knowledge about who the partner was, that this was going to pump the token even further. Well, that actually didn't happen. They announced Google. The token price fell. It initially surged, I think 15-20%, fell somewhere around the vicinity of like 30% after everything was all said and done. I don't know where the token is sitting today, but not only did the market kind of first like have a bad reaction to this, but I think just total sentiment in the community about how it was handled was bad. So Wax came out and basically said, "Hey, this is the guy," and didn't give any other information on how Google was going to help Wax other than these broad, like, they're going to help us drive industry adoption. No announcement from the actual guy. So there was just a ton of stuff that I think Wax can do better, but this announcement essentially fell flat, where a lot of people were expecting once Google entered the realm that this was going to be huge for Wax. What do you guys think?
Crypto people are so funny, right? Like if there's no announcements whatsoever, that's, they're bitching about that. Like, oh, why don't, when partnerships, blah, blah,
Yeah.
blah. And then as soon as you get like some sort of partnership, even if not giant, it's like, whoa, what the hell? Like what, where's more information, right? Give me more information as to why my investment was, the right investment. So at least Wax is doing something, right? There's so many projects out there still not really even doing anything. Price wise, we're just over 5 cents a token.
So it still hasn't picked up.
Yeah, which is down from the high of, is that like something crazy, of course, like $2 or $3 back in January 18 timeframe. So it's like I said, at least they're kind of trying something and offering new, some sort of new council or something, versus so many other projects in the top 100, top 200, top 300 by coin market cap that just are complete wastelands.
Yeah. I mean, more transparency is obviously better, if they can actually say, okay, what are these councils guys are going to actually be specifically doing, and have them, maybe on the AMA, that would be definitely be better. In terms of the price, actually I just wanted to look at that pump that happened because of those councils, just to look at the volume there, traded like 55 million, and this is like a 63 million market cap token. It's like we can expect that to happen. If something big like that in terms of trading volume comes through, for the price to be pushed up that high, considering where the market cap is for that token. So
yeah, you got kind of the classic Bart that played out, right? Like huge pump, huge dump. So it is interesting to put out there. I mean, you always want to kind of buy the rumor, sell the news. That's not investment advice at all, anybody out there. But this was kind of the classic case of once the news dropped, it kind of just the price kind of dropped as well. So I like your point that you made too, Demo, about the AMA. It's like that would have been better for just like the overall sentiment from the community of like, let's get a video with this guy talking about his partnership with Wax, as opposed to just dropping his name out of the hat and just saying, hey, this is it. So they've got 11 more to announce over the next 11 weeks. So we'll see how they kind of mold or change the way that they're dropping these announcements based on what happened. If they change it at all, maybe they don't care. Last quick news on EOS Blankos, which was an EOS VC funded project back in the day. I think it was in 2018. Mythical Games, which is an arm of Blizzard, actually. That's why it got so much hype when it was announced. Is coming out with Blankos. They've had a ton of like mainstream news. I believe they were on like PC Games or some type of like big publications article where they were talking about blockchain gaming and how Blankos is gonna be one of these MMOs that come out. But I mean, they got $35 million in funding back in the day. They're gonna create they're just another project creating this metaverse with NFT collectibles. Certainly it's a kind of saturated market right now. But we'll see. John Linden came out. I wanted to point out this tweet before we move on, because it wasn't clear how they were actually using the EOS mainnet, right? Like what you want to see is Blankos coming out and saying, hey, we're doing this on the EOS mainnet. So they're using D-goods for their actual NFTs, but this is a message from the CEO before we move on to DeFi and close up. He said, EOS community, thank you for the support this week on Blankos. We will clear up how EOS.io and EOS mainnet would work together. Our mission is to use blockchain to bring asset ownership to the gaming market in a safe way while allowing players to have full ownership. So good news, out of the EOS mainnet there for Blankos. Hopefully it's a popular game. I mean, all of these projects are trying to, I think, they have different goals in a sense. Like I think Blankos has maybe positioned itself to be used more to the non-crypto user, where there's a lot of metaverses right now that are crypto art, crypto gaming, and we want to attract crypto users to, exchange different currencies within our game. So I think Blankos is attempting here to kind of branch out and actually be used by the broader gaming community.
Nice. All right, so going into DeFi, a couple points here. The first one, really quick, is just basically talking about how the total supply of stablecoins has grown 94% since early February. It's from the block, and it's talking about how In that time, the total supply grew from 5.68 billion to 11 billion. And during May, that figure rose from 9.6 billion to 11 billion just in May. And, it kind of plays along with, what we've been talking about for a while in terms of just the demand for stable coins globally due to the global situation that's happening. Tether obviously has contributed quite a bit to that, right? So the overall market share when it comes to that pickup in stable coins, 94%, it was 86.2% Tether. So what I'm saying, like take that with the grain of salt, but in general, I mean, we see stable coins performing pretty well in terms of attracting users and demand globally, especially with things that are going on. And then the last one, in terms of DeFi, we basically have something where DEXs are doing pretty well. So DEX tokens return more than 5x centralized exchange tokens this year, aimed at a slew of major protocol upgrades. And we're seeing some upgrades that are coming from DEXs, in terms of features that they provide that allow traders to do some fancy stuff like iceberg orders and so on, right? All these cool tools that you can use that maybe some centralized exchanges don't have. And also at the same time with the regulations and things that are going, maybe certain exchanges are not offering services to certain countries where DEXs can participate in there. Overall, DEXs have a specific market that they're serving and that they're filling the specific need. It's just before they didn't really have that many features to offer to their clients that would really kind of attract them more to go with this decentralized exchange rather than a centralized exchange themselves. But you've been following DEXs for some time, right?
Yeah, I remember. Good and bad. I mean, we made a small investment into IDEX, which has done pretty well and is getting ready to launch the 2.0 version of their exchange. And I remember looking at Kyber like a year or so ago when it was, kind of down in the dumps and nobody really knew what it was going to do. And they were talking about this DAO and it's like, I don't think that's going to work. Next thing you know, it's up like 600% token price. So that was a miss there. The interesting thing for me with DEX is, I mean, I think the DEX token growth is off the back of the centralized exchange token growth. I mean, you saw just crazy hype around BNB and FTX's token has done pretty well. And Huobi's token, for a long time did well. I think the only centralized exchange token that didn't do well was the Bitfinex Leo token. But very stablecoin, yeah, very.
I think I got to like $2 recently. I saw
did
that.
it?
No, it did. Yeah. I'm telling you,
dude. I swear to God, that thing is like traded between 90 cents and $1.10 for 2 years. That thing has just been a stablecoin. Hold on, let me see.
Yeah, so it's it's definitely started on the back of that. I wonder if maybe people look at the overall growth of DEXs alongside Uniswap and Kyber, and hop in, kind of trying to find the next big DeFi exchange. DEXs are tough for me because a lot of them aren't actual DEXs. They're kind of this hybrid version now, and in a lot of ways, to me, exchanges are kind of like a race to the bottom when it comes to fees and scale, right? It's very much an economies of scale that you're trying to offer. So I think that they're really, DEXs have done a good job of focusing solely on the crypto market and your hardcore crypto users or traders who want to kind of exist in a completely decentralized, completely crypto only world. And DEXs have done a good job of getting to a point where they're usable enough or offering unique features that other centralized exchanges don't offer that, have attracted enough hardcore crypto folks to come on and use them. So, maybe the selling point is now like, okay, well, for every new crypto user that we onboard, so some fraction of them are going to come and use dexes, and in 3 years synthetics or whatever will be as big as a Binance kind of thing. That's the sell anyway. So yeah, not surprised at this point that DEX tokens are going to do well. It does kind of feel a bit like the top, unless we get some sort of other large bull run. I mean, I think there's so many people talking about DEXs that and it's kind of reached that limit where it's like, yeah, okay, I get it. It's a quote unquote decentralized exchange, and it's offering some sort of automated market making or liquidity pool thing, and I don't know. That's just my thought, right? Is that it seems like that that opportunity has kind of passed by, whereas if you jumped in a year ago, like I was saying on Kyber, you'd be able to come in. But maybe I'm wrong, right? Yeah. Maybe they come and start to really compete with centralized exchanges.
I think it's important to kind of split the conversation up in between like token price and kind of investment opportunity and then usage, right? Like I think usage can't be seen as a top because it's going to increase. We've seen user usage increase over time with DEXs, just coming from, I guess, functionality. I don't know. Uniswap is definitely taken off. I don't know how Nudex is doing on EOS. They're the primary one on EOS, but there's a ton of different, obviously DEX. I'm sure IDEX usage has increased, but yeah, as far as from like an investment opportunity, we've seen the token price, as the article states, like they're performing way more than the centralized exchanges. It would be kind of, I wouldn't say dangerous, but it's definitely that risk reward right now is not as high as it was a year ago, like you're saying. So I think, like, I want to clarify, when you say like we're reaching the top, you're not talking about like DEX usage.
No, I think DEX usage will increase just as the market continues to grow. Mm-hmm. But I think that the overall like hype around DEX is kind of being the next thing. Mm. At least just feels like it's getting close to the top. Right. I mean, you saw the same thing with centralized exchange tokens, where it was like everybody made so much money on BNB as it broke $20 and broke $30. Obviously, the rest of the market was pumping a bit too as Bitcoin hit like 13 or 14K. And then Leo, as a prime example, everybody was like, "Oh, Bitfinex is huge, right? This is their token, right? Let me get in." And it just slowly went from $2 to $1.
Binance DEX.
Yeah, exactly. I mean, it seems from a token price standpoint, it seems like we're getting close to the top, understanding that would be signaled to me by kind of the general hype and interest around decentralized exchanges.
Got it. Yeah, Leo's a good one to point out. Dimitri, you're trading at a premium though. This thing is traded between 90 cents and $1.25 for the last year, I think.
Oh yeah.
Leo.
So, yeah. There you go. So I was right?
It got to 2 right after in June 2019. It was at $2.
There you go.
When it launched.
Oh, right.
I think.
Oh, man.
Launched then.
Yes. So Dimitri's been trading at a premium for a while.
But yeah, just to kind of wrap up with the DEX stuff. It's like, I like what you mentioned about the fees, right? A lot of traders are not noticing, and I don't think competition for the fees are at its height yet. Or I think when the traders are going to start competing, to find the best place that has the least fees, it's definitely going to start being more competitive in choosing which platform they want to go with. Aside with also like the liquidity and all that stuff that's should be available on those platforms. I had a point that I wanted to mention, but it slipped my mind. So,
and that is the end of
cut it off. Yeah, that'll have to be on Dimitri's desk, man. You'll have to think about it. All right, I'll give you 10 more seconds if you can think about it while I wrap this up. But we appreciate you guys, stopping by today. I think we peaked at around 24. For those of you that stayed till the end, we appreciate it. Thank you. Please leave a like. If this is your first time, go ahead and subscribe to us. We're bringing you cool content and informative content all week long, every week. So we appreciate you stopping by the Layer 1 channel today. Otherwise, we'll wrap up here. We appreciate you following along.
Yeah, for sure. What's going on tomorrow? We've got some interviews this week as well.
Yep.
Right.
Dimitri's desk tomorrow at 5 p.m. Eastern. We're gonna definitely chart TRX as Manos asked, and definitely gonna recap on the sentiment there, see what's going on. We got some volatility, so we can definitely talk about what's happening, where Bitcoin is, where it might be heading. So it's always good to see, to have volatility and not have your charts kind of moving sideways. And kind of talk about, well, the sentiment is kind of the same,
Get chopped up.
Yeah.
Amazing. All right. Well, we'll drop off here. Manos is saying thanks, guys. Manos, we appreciate you kind of following along here and adding your comments. But that's it for Layer 1 Live this week. Thanks, guys.